Okay, we are now recording. Hello, everyone. I hope you are well. Welcome to this mentorship session. Today is Wednesday, the 21st of August. And I want to talk to you about the candles. I want to talk to you about market structure. I want to talk to you about everything and really where we need to be in the markets, where we need to be to position ourselves in the markets, and what we need to do when the market is doing exactly what it is doing. Now, just for reference, these candles, guys, okay, it's clear they work with whatever time frame they're on. So this is a monthly time frame. This is the DXY. This is the dollar, which basically means this one candle is responsible for all of the price action that you see within this candle here in a month. So we've got 9 days and 5 hours left of this particular candle. And we've had, quite frankly, a very, very volatile DXY. If we look at this from a weekly perspective, once again, you can see it was this candle here, straight up manipulation. So the opening of that candle, of the monthly candle, was right here. And you can see price went into this area of inefficient price action and is clearly on an absolute mission to target this liquidity right here. Now, truth be told, guys, this has been a particularly hard week to trade. Now, if we look at this from, Euro USD, because we're obviously just looking for trades in particular, you can see the similar sort of month price action that we have here in the same way that we are currently sweeping towards. Well, we've actually taken that liquidity there. We've also got this liquidity as well. When we look at this from a weekly perspective, you can see it's already kind of nabbed that liquidity. It's already come from this level of imbalance right here. And once again, this is the opening of the candle right here. And then price came down into this order block. So the open of this particular candle was on the August was here. Okay. And price came into this order block right here. Now that itself, guys, is a very, very powerful entry. I know we're on a weekly time frame, but there's plenty of examples I can show you on a smaller time frame as well. When you see an engulfing candle, just like this one here, and by the way, an engulfing candle is a candle which literally engulfs the candle next to it, calling this a bearish order block. Now this order block is high in probability because this order block was responsible for rebalancing into an area of inefficiency. And then once price swept lower, this candle here opened into this area of inefficiency and closed higher. This order block, you could swing trade this. Like you could have on a weekly time frame swing traded this entire move. You could have had your stop loss here. You could have targeted here. You could have been really cheeky. You could have done something like that. Okay, you could have got a 7-1. That would have been your whole month's work done if you had a really big account as well. But that's obviously not the point of what I'm trying to make here. The point I'm trying to make is these are high probable areas. And you know this is highly probable when you see kind of like the artwork that has happened between it. Okay, this is a highly probable order block. And when you go to smaller time frames and you look at the relationship between what has actually happened in here, this line here is the order block. Let me just change the color of that to orange. And you can see the order block. This is the monthly open. Okay, price comes lower. That's the manipulation, comes lower first and then pushes up to this area here. Now, within this order block, we have also got an area of inefficient price action, which sits right here. And then price expands to the upside. So that is the area which could have been your entry within this area of imbalance on daily time frame. Realistically, I would have probably waited for price to come lower, but it literally mitigated straight onto the order block, expanding and then giving you another entry right here. Now, a lot of you are saying, yeah, but Tom, I don't trade on the daily time frame. But at this point in time, it's like, okay, that's absolutely fine. But look at the clean entries that are playing out at the moment. This is it's kind of a lesson as to say, why can't you trade both? Why can't you take a small position size in here just so you're in the move and then focus so much on the smaller time frames then? Because a lot of you probably aren't making as many profits this month because there haven't been too many opportunities on the smaller time frames, particularly on the pairs I trade anyway. So the good thing about trading higher time frames is there's pros and cons to both. Obviously, risk reward isn't going to be as high as if you're on a smaller time frame, but you don't have to worry so much about high impact news events on the higher time frames either. So you can pretty much get the best of both worlds. I think these are really good positions to be potentially taken. This daily entry right here would have been a really nice entry because you could have entered maybe at 50%. You could have entered on potentially that order block. You could have had your stop under this area here, and you could be holding it right now for a 3-to-1. If you've got a £300,000 account, that's good money if you're risking 1%. Think of it like that. You know, that's kind of the showcasing for what we want to do. Now, obviously, you can go into small time frames. The idea is that we go into small time frames because naturally this is not an area of entry for normally us. Now, for me, normally I wouldn't always enter in here. I have entered in here, but I wouldn't always enter in places like this. I like to day trade. So my entries are very much on the smaller time frames and things like that. But this is just showcasing more and more evidence that price is always looking to seek areas of liquidity, and price is always looking to do it from areas of inefficient price action. That would have been your target. You could have been in from here, you could have been in from here. If you look at this from a 4-hour perspective, you can see the price coming higher, you can see price coming lower, you can see price expanding heavily throughout the entirety of the month. If I turn on this weekly indicator here, this is literally last week's price action. You can see within the vicinity of what kind of happened here. Price came down, it made a high on Wednesday, came down, made a new high really at the start of this week. This is the new week's trading. This particular week has just been pushing to the upside. Now, I'm not a massive fan of particularly entering straight in here because there's imbalance here, there's imbalance here. This is manipulation lower, and we're very close to this area. It's now coming to the point where we need to start thinking about where price is likely to return to. Because if you're on a smaller time frame, you need to be looking at where your potential opportunities lie within and on what particular days they are happening within. So you can see here, this is clearly a huge news candle, okay, which came into this area of inefficiency, pushing and pushing and pushing up here. Now, a lot of people probably would have been bearish from this area here, only to kind of see, look what's kind of happening. We're just pushing and pumping to the upside. When you get to the weeks, you can see here, you've got Wednesday made a high, Tuesday made a low, or Monday even made a low. When you come into the end of the week, you must understand that it's actually unlikely price is going to just come and create a new low. And when you look at this from a 4-hour point of view and things like that, you can see the trading range which has been created. You can see the 3 candle formation to represent this particular low right here. And you can see the 3 candle formation at the top to represent that particular high right there. So your trading range on the 4-hour time frame is from here all the way to here. Now, you don't have to just take an entry on the 4-hour, but the 4-hour looks cleaner than the 1-hour at this particular stage. If you measure this entire range, you would notice that price literally came into the 71% level. Literally come into the 71% level. So let's say, for example, for argument's sake, you did just press the button in here, and your overall target is this liquidity here, nearly for a 4-to-1 or something like that. That's great. Let's say you're in that. That's fine. This is the position you need to start thinking. This is how you need to start looking at your trades. You could be in here. That's an optimal trade entry level. Very, very simple. We've got higher time frame areas of interest. You can see here on the 4-hour, it came into this area of imbalance. There's also a breaker block there. It's very, very bullish. It's reacting from this weekly order block. This is the evidence you can see. These are the entries you can sit there and take. If you want to try and chase this all the way up, you can absolutely do that. You can see, you know, what's potentially happening in price. When we look at the 15-minute time frame, you can see the reaction it kind of had from this level all the way higher. And, you know, this is Friday during the London session, just as an example. You could have potentially got in somewhere here on the assumption that price is going to do something. Realistically, I would have probably waited until probably some form of liquidity sweep on a smaller time frame, and then potentially an entry on a smaller time frame. But realistically, for me, there isn't really anything that I would want to gravitate towards in here. Nothing that looks as clean as this particular 1-hour entry or 4-hour entry within here. What we can see, if we look very closely, is that when price is expanding, it's creating this order block. And when price creates this order block right here, you can see that actually now, because we're starting to pair higher time frames with this sort of area here, now you've got a bit more of a license to start scouring into the smaller time frames. Now you can start looking at it and thinking, okay, look, this is where it's coming to. You can see clearly there's a liquidity sweep. It's mitigated into the London session, which created this order block as well. That may not have been an entry, but is there any potential chance that, you know, we can see something on a smaller time frame? Let's see if I can just reply this back here. You know, you could then be looking on a small time frame. And then you get to the point in the stage where you think, okay, let's look at what is potentially happening here. We can see it's towards the back end. It's the back end of the New York session. But what I do like about this particular price action is that we have got another order block, which is being created right here. And price swept this liquidity, mitigated into this 1 hour order block. Order block right here. So price mitigated into that 1 hour order block. Let me just put that to the right. And then what happens then? Price expands higher. Okay, now this is the beauty of trading. Okay, you've got an area right here. That could have been an entry on a 5-minute time frame towards the end of the New York session, a little bit late in the day. But let's say, like me, you were waiting for that one there, and price didn't hit in. What you have to understand, okay, is you're not going to get the most perfect of entries every single time. And what you actually are going to understand after a period of time is when an area, this is just a let me do this a little bit lower. Bring this down here. Move this over here. If you've got an area of imbalance and a candle comes into it and does not close lower, so basically, if this is an area of imbalance within, let's just say, you know, something like, I don't know, that. Let's just say you've got an area of imbalance and this candle comes in, violates lower and closes like that, that imbalance is no longer valid. When you see something like this happen, that's your candle right there. Okay, when you see like a wick traveling lower, and then you see the candle close inside the imbalance, that is a really good sign, basically. Okay, that's a really good sign. But what you actually get within there is a bit of a waiting game now. So what we're looking for within this here is, because price has closed lower, waiting to see what the next candle is actually going to do. And as we can see here, if we create a bullish candle and we actually engulf the entirety of this candle here, that there becomes a bearish order block, which means if there was another area of imbalance lower and price came into this imbalance, created a valid order block, engulfed higher, you can trust the market is not necessarily going to come back down to this imbalance. Okay, you can trust that the market's unlikely to come back down to this area of imbalance, which means this order block you see right here is open for entries. So now the next time this candle comes lower, just like this, and creates something like that, you can enter anywhere inside here you want. You can enter at 50%, you can enter at the top, you can enter at the bottom, you can do whatever you want. It doesn't matter. We need to stop overcomplicating entries. But this is what you can do. And once you enter within here, your stop loss just needs to be below the low of the order block, and you can take it towards the next level of liquidity with the trust that price is probably going to head towards that area there. So as you can see, we had this area of imbalance. We had another area of imbalance. We already engulfed this area here, making that a valid order block. We are already playing with a 1 hour order block. We're inside a point of interest from a higher time frame point of interest on a 4-hour time frame. Everything is stacking in our favor. And on a smaller time frame, you see engulfing candle, you see valid order block, you see this particular down candle here respects this area of imbalance from a bullish push in a change in the state of delivery. Once you see that, this is your entry. It's very, very simple. That is your entry. You just need to put your stop loss in a safe place, and you just need to target the next area of liquidity. That is exactly the trade you could take. Now, some people say, yeah, but you haven't got an imbalance. Well, we have, because we've already respected this imbalance. This is for an entry if you're too nervous to take a trade in here because you're worried about price coming into here. So I was looking in this imbalance. I wanted price to basically travel lower and then go higher. And I would have, I'll be honest, I would have taken an entry in here. If the imbalance had come in here, my entry was going to be something like that. But I am observing price action. I'm having a little look to see, what does this thing here look like? Can we engulf this, make it an order block? You can see clearly we have done that. Your entry is right there. Your target is that area right there. Okay. Very, very simple. Target is liquidity. You could hold on to this. I mean, if you was holding on to this, you know, up to where it was, you know, that could have got you a 10-1 or anything. If you held on to it all the way, it would have been really, really good. So you can see here, we created this array. If we just look really, really closely into this, 2 little doji candles, pathetic little things, not of interest to me. Unless, so what I would do in this situation is I would basically couple them 2 together. So that's 2 candles I'm basically just putting together. But one thing we do is extremely high move up. So let's say you didn't have the minerals to take it from here. Let's say you didn't have the minerals to take it from here, or from here. You've actually got a 3rd opportunity now to get into the market. And actually, by the looks of it, because you could have your stop loss below the low, you would have a better risk reward trade. Maybe you're just a little bit nervous because the spread wouldn't allow you that. Like the realistic, once you get a big account size, 1 pip isn't going to be enough. So you can bring your stop loss down here. But again, you're observing price action. And then there's no more, like you can see here, price created another order block. You could have waited for price to come in, it didn't happen, created an imbalance. And then this is just the expansion phase. This is towards the end of the New York session, just in an expansion sort of way. But the point is, it's come to this area of liquidity. Okay, it's come to this area of liquidity. And your entry is in there. You've got your 1 hour entry in there. So what's ever stopping you taking half a position into this area right here? You could be taking, let's get rid of this here. Let's say you held that all the way to the top. That's nearly a 40-1 trade. You could have just left this at break even and you could have been getting a 40-1 trade out of it. Or you could have targeted this area here for a 14-1. You know, targets are everything in the markets. And this is just very, very simple, clean price action. Optimal trade entry level. Optimal trade entry, by the way, guys, is easily the most simple way to find entries within the markets. The most simple way to find entries within the markets. You could be trading on any time frame, and you could be using, my favorite one to use is the 71% level. But once you are able to find consistently those sort of levels, you know, that's going to sort you right out. You can see here, you know, I'm pretty sure price wouldn't have come to the optimal trade entry there. But if you'd have measured the range that we created within here, you can see literally price hits the 71% level. So the 71% level is obviously going to be an extra piece of confluence for you. But it will massively help you out from a higher time frame. Now, let's say, for an example, you know, you did take a small position inside this higher time frame area, and you held this for a 3-1, and you also in a week's time, you took this area here for a 4-to-1, and then you took a random 5-to-1 in here. That's 1 week, or let's say 2 weeks, 2 weeks max, 0 losses. Even if you had 1 loss, it doesn't matter because you're going to get losses in trading. But we're talking 4-to-1. You know, that's not going to be always a 10-to-1 all the time. You might have some. Let's say that's a 5-to-1. So there's 9%, and then possibly a 12%. 12, 13% over 2-week period. Just trading structure, just trading in direction with the higher time frames, just looking for the right opportunity to enter from, and they all stem from the simplicity of looking at price from the highest of time frames, looking at where we want to see price go, observing the fact that on a higher time frame, the weekly time frame, we've done the exact same thing here as we have on a smaller time frame. Price is fractal. You can see valid order block once we have engulfed the entirety of this candle. This down candle does not close below this level of imbalance. This up candle comes below this candle, sweeps the liquidity just to rebalance into this area of inefficiency, and then closes higher. That is a valid order block. You can enter inside there. Okay, you can enter inside there on a higher time frame. You can just have a floating position for weeks on end. You can see there, we came into the daily imbalance. Price, whilst expanding higher, creates another area of interest. Within that area of interest is your optimal trade entry level from a 4-hour or 1-hour point of view. Within that 1-hour point of interest, you can see the price action that pushed lower. And then obviously we've got that smaller time frame entry that we've obviously just gone over, which is the engulfing candle once again, as previously explained. Because you can see here, once again, price is fractal. What is the difference between this entry that you see here on the 5-minute time frame, other than better risk reward? What is the difference between that area of interest and the area of interest on the weekly time frame? Price is fractal. It works on every single time frame. That's the reality of it. That's the reality of it. This is the stuff dreams are made of. This is all you have to study. This is, I'm getting really fed up when I see all these, child influencers that are trying to pretend that it's all about certain points of analysis. It's all about ICT concepts. It's all about this. It's not. It's just simple structure. Let's just remove all the lipstick and you could do it again. We could highlight the same stuff, areas of imbalance. You could find it all. Now, I know we're obviously, studying this in hindsight, and I know I'm going to get criticism for that, but I'm just trying to make you learn and understand that the market, and I've banged on about this for so long, the market's seeking to do 2 things: rebalance into areas of inefficient price action and target areas of liquidity. Now, where we currently are right now is extremely high within the market. So we have swept above this liquidity right here. Okay. There's no point doing anything now. But what we have to do is observe and see what type of price action we've got, because you can see here, you've got this area here. Now, this is obviously bullish. I'm a little bit conscious of the fact that we've sucked this liquidity. I'm starting to think we could probably come lower. So now let's see what type of imbalances we get created. I wouldn't be entertaining anything until price at least come to this level here, or potentially came back into this order block here. I'm happy with this order block because that order block is also high in probability because we've got this area of imbalance that is obviously filled in. So I'm happy with that order block. I'm happy with that being my trading range. The issue is we don't know when this trading range is going to finish just yet. So with that in mind, we're on a bit of a waiting game at the moment. I want to see if price is going to come lower, maybe into this area of imbalance, maybe to take us even higher again. Maybe we're going to look to target that area there. Or, maybe we're going to start targeting these levels up here. But one thing I just want to kind of recap and just conclude on is that I want you to ignore the noise. I want you to keep things as simple as you possibly can. And I want you to understand that this is just a process that once it clicks, it's going to click and it's going to feel amazing. Okay, it's going to feel amazing. And this here is what you have to study. So, if I was going to set you any homework, I would just say, have a little look at these areas, find potential entries, find potential areas. You're not going to see that small 5-minute entry straight away, but you can observe the higher time frames. And the beauty of the higher time frames in this instance here is you can measure your OTE level, and you could have hours before you actually have to take a position. Absolutely hours before you have to take any kind of position. And then you could observe price action on a smaller time frame whilst currently being in a position. And then you kind of like your smaller time frame entry is risk-free. But if there's one thing aside, the one piece of advice, and I'm just going to close on this, one piece of advice I would give to everyone here, everyone that's watching, is don't run before, don't run before you can walk, because everyone comes to this and tries to trade on the smaller time frame straight away. Now, I've shown you the smaller time frame entry, which is great, but the higher time frame entry is a lot more simple. And guess what? The higher time frame entry is just as easy to make money as the smaller time entry. Focus on the higher time frame because it's slower and it's a bit more user friendly, beginner friendly. Once you get really good at that, you can then start diving into the smaller time frame stuff. You can then start looking at the smaller time frames. But until then, you know, let's try and focus on what matters, which is essentially making profits within the markets. But hopefully you have found this insightful. And I'm going to close this here and ask some questions. But hopefully you found this insightful. Hopefully, you know, you've got good value from it.